Tesla stock 367. Are we predicting that it's going to hit 400, or is just that that's a little too aggressive at this point?
No, it's not aggressive because the move could do whatever it wants. So could it break 400? Of course. We're only like, what are we, 360? So 10% of 360 is $36. Of course we could hit 400. Again, this move will take it will take on something that's not in the stock price. This base has been from we were looking and talking about it from the end of 21. Tesla went in a bear market, right? Almost sank 80%, 75%. This is like a coiled spring. This thing has been flattened out like a pancake. And like Xander said, up top, there's a lot of buyers that hold this stock probably at 400, at 380. They own the stock from 2021. So they're still there probably. So there's not like there's going to be a lot of selling pressure up there. Eventually, this is going to end and it'll pull back at some point and people might reload it for long-term positions. But in the short term, it's anyone's guess. This could go for another few days. It could end tomorrow. We could have a huge spike and maybe a pullback. But like no one knows, no technician knows, because this move is a momentum move based on, again, the election. This is not like, oh, an earnings report and we're looking at it like this is a vertical line happening now, a
Do you
vertical
guys
line.
agree
So
with that?
yeah.
That this is just the election. It's now been November. What about a week later, and it still keeps going up. It's all election.
So it's a clearing of resistance, right? The wind was in Elon's face for all of his companies, and now you have a president, right? We have a CEO that is, uh, basically an advisor, a personal advisor to the president of the United States, and the companies and the projects that this guy works on are national security level. It's great for America. It's an American company. It manufactures here batteries, which we need. So all of those things it's just removing all of those headwinds now causes a repricing. My question is this a Wall Street basically repricing and saying, okay, fine, we believe that robo taxis are coming. We believe that now without regulatory pressure on FSD, on SpaceX, on Elon being investigated, is that going to cause? Is this what this is? Like a full-on repricing from like a discretionary to a tech company
That's too early.
from the from the Wall Street lens, not from the S&P looking at the financial lens, right? If the market is truly forward-looking, they one fund goes, then there's another analyst that upgrades and changes it from hold to overweight, or buy, right, from buy to hold, whatever they upgrade to. And then it's a self-fulfilling prophecy. It creates a cascading wave, and then the next, right, like we were pulled back a little bit today, $20 range, and then boom, back up to 350 to the VWAP in the middle of the day. And now after hours, it was already pushing up before it finally got called. And so now we're at 367. I'll check it in a second. But yeah, those are my thoughts on it.
Okay, well let's bring Wall Street up. Here's Simon Hill. Go ahead.
Xander, I think you're pretty bang on. There's a lot of confusing indicators that we're looking at, and I'm looking at it as well, and I didn't expect a run like this, but we're not selling based on just moving away from the kids, trying to put them to bed. Why we've held through this and we haven't looked to selling is all of the Tesla bulls who have held on for the last 3 years have been pretty pessimistic as the stock approaches 300 and beyond. And it's almost this contrarian view. It's like you've held on for so long. We all know how much the stock is worth. But the second it goes up for more than a couple of days in a row, we're so used to seeing the stock sell off. And if you look and say, well, our valuation on the company, the fair value, I would say, based on future earnings and possibilities or probabilities of FSD, robotaxi, and robot. I mean, that just gets a bit nutty. But let's say it's 1.5 billion market cap. So we're sort of we still have a ways to go. And could the stock go to 2 trillion? Sure. And would we, well, would be forced to trim in our portfolios by then. So if you take it from perspective of where was this stock, 3-4 years ago, we started adding to the stock in our portfolio at a 2% weighting, and continued to add over the last number of years, starting in 2021, 2022. We're not up as much as a lot of people in this circle, and most of the Magnificent Seven are far higher than their all-time highs. And Tesla, I think everybody in this circle would agree, is ahead in terms of technology than the other Mag 7. Maybe NVIDIA is unique in what they do. They're also not competing with Tesla. Well, some could argue, but so I think that we need to be more patient as investors, and I'm talking from a personal investment standpoint. Glad that we're invested heavily in this company, and I'm really not looking to sell. If we talk about the technicals, we've been posting this for a while. It was 270, it was 299. As soon as we broke out from there, the stock is just flying higher. The next technical resistance is their all-time high, which was what, Xander, 418?
414. Yeah,
414. And I
change.
think we're going there, and we're searching for that, and then we're gonna have some resistance, and it'll break through.
Simon.
Wait. Yeah, I just want to jump in because I was speaking to Mark Newton. So Mark works for ARC. I'm sorry. What am I thinking of? Fundstrat, technical analyst. And he was saying that actually at the end of Friday till the end of the year, the last week of December, that there will be consolidation is what he's expecting.
No, well, Herbert, like I said, Mark is a great guy and he could speculate all he wants, but let me give you an alternative, open it up a little bit. So I appreciate what Simon was saying with the, fundamentals and technicals, but sometimes stock is a funny thing. I've been watching this stuff and you guys too, but think of it like this. I know we all want to be investors in fundamentals, but sometimes stock has a mind of its own. Now, I'm going to propose this. The stock has been ripping kind of just before the election and after. I know I'm saying it's an election move. Here's why. Sometimes people vote stock for what they want, like a movement. Tesla stock, for whatever you want to say, is a cult stock for a good reason. It's a great business, and a lot of this is in the future. But sometimes people are voting saying, we want this company to be a great company. We want Elon Musk to be successful. And how do they vote? How do they show that? By going for the stock to show that we're with you. We're with Elon. We're with Trump. We're with that. And it's sometimes as simple as that. People are buying the stock and they're saying, we support Elon, right? Ergo, we support Tesla. We support the capitalism. We support the Trump trade, whatever that is. Sometimes it's as simple as that. And it can go probably into the rest of the year, just like the whole market, because we have a green light. Even though we're up a lot, their valuations on a lot of these other companies too are not that extreme. So I think it's more that. So, I'd be happy for people to disagree with me, but I think this move is a clear move of people voting with their dollar, saying, we believe, we want it, and it's as simple as that.
Let me push back on that a little bit. I do agree with you, but I don't think that will have enough force. You've got 200 million shares trading today, and that's institutional money. It's not the everyday day trader that's buying into this company. There's big money, and I talked about this over the last few months. It's the amount of money, the amount of funds, whether it be ETF or mutual funds, that are underweight Tesla, and I listen to it in the locker room, and the guys that are beside me, they're managing some of the largest funds in Canada, and they're all on. They missed out on Nvidia. We're in Canada, okay, so just give us a break. They missed out on Nvidia, and they're underperforming their benchmarks, and they can't afford to do that again. And I look at, if you just go into like the filings of the largest funds in the country, they're underweight Tesla, and they need to get, and that's why every day we see this stock move. It rips higher after hours, and then during the day there's no time for anybody to get in. Trust me, I know this stock's going to 500 probably within the end, the next month or so. I've been wanting to buy more options on this, and I haven't been able to. It's a ridiculous market. Thank God, I'm heavily invested in the company, and I'm rallying up. But I have bought and sold a number of options along the way up. But there are a lot of institutional investors that are not positioned properly. This is a big weighting in the benchmarks now, and they're underweight. And as a result, they're going to underperform. And as a portfolio manager, I understood this over the last number of years, and I purposely started to build, and I'm not trying to talk my own book. I just want to do a really good job and have great results for clients over time. But I knew that if I got this right and I overweighted a position, that everybody else was underweighted, and that investment turned out to be extremely profitable, which we thought it would, we would outperform not only indexes, but all of our colleagues. And I suspect that's what's going to happen here, or is happening.
Simon, I did a review of 8 institutional analysts, what they said after the Trump election. And across the board, they said that it's because which is the weirdest thing, by the way, they think that regulations for autopilot and autonomy is going to be a clearer path. And it's not like beforehand that was the reason. They just didn't believe autonomy was going to happen at all. Okay. So is institutionals going to, is it still an institutional rally at this point?
Well, I think it is, but I don't think that regulation, I've heard that. I don't think regulation is a hurdle. I think the hurdle is you got to solve it. I mean, we're pretty much there. We're all driving FSD, but it needs to be solved 100%. And as soon as it is solved and we're 100% efficacy, I don't think the hurdle rate to get this thing approved is an issue. It's going to be how many cars can you produce. That's just my take, though. I don't think it has to do with regulatory environment at all.
I want to ask you another question, Simon. I find it funny. Let me position it this way: that prior to this jump, institutional investors will say it's all about earnings, it's all about margins. Take a look at what's going to happen next year. It's flat, it's small growth. We're not going to invest. Then this jump happens, and so now they're all repricing. And now you don't hear them saying, "Oh, it's because earnings is jumping next year. It's for this reason or that reason. Tesla's now an AI company. It's a Trump trade." Anybody want to address that?
Yeah, I'll take that. I think that this like I said it on our last Cyber Bulls. PE is out the window. PEG ratio out the window. I am not looking at what the stock is like, what the analyst thinks it's going to be worth in a year. I know what it's worth, right? And like, think about this: if the market gave it a $420 price or 414 price tag before, this was prior to trillions of dollars being printed. Was that a big FOMO wave into a lot of liquidity flowing into the markets? Yes. Was it irrational exuberance? Yes. We pulled back. But then there's going to be this wave of a correction that's going to surpass the all-time high, and it's going to settle into a new level. And then it will probably test back during the, you lose the mojo, and then you go and test back down, and then you check to see if 414 holds or who's going to let go of their shares. But to me, like, this is really Wall Street taking shares, there's a lot of people that have been caught offsides. Every single covered call seller is roasted. So shares are transferring from whoever was selling covered calls to institutions or whoever's buying who was buying calls and making money. So I have in my Roth, I had shares called away. Like I'm fine with it. I'm okay with missing it because now I'm playing it differently. But I just think that there's so much more to it than just like what is Wall Street Bets thinking about this? Is this a gamma squeeze? Is this the wave? Like you have institutions what combine everything what Simon was saying. Do you have institutions coming in, they're buying stock, and then where everyone's going crazy over options, I'm buying like 300 strikes out to like June of 2026, so in the monies, and I'm not looking at price tags. I don't care. I'm riding the wave, and then at some point the momentum is going to stop, and then the gamma squeeze is over. So I think that there's so much to it. This is why like price targets and technicals, they need to be put aside for the moment, because what we're currently seeing is not you know analyst driven thinking. It's just FOMO. It's a FOMO wave and an analyst upgrade wave.
Okay, Sat, did you want to join in? You had your hand raised earlier.
Yeah, I just want to say it's one just pretty routine for Tesla. For people who may come across it to be new, it's actually a pretty new routine. I mean, it happened in 2013, 14 when the Model S production was doing really well, and the gross margin was like 25.2 or something, and it tripled. And so, and the same argument was said, and it like, oh, it's really high, the P ratio is high, this and that. But when it's a growth company like this, and especially this particular time, the uncertainty is not something the markets like, and they don't know what's going to happen. So people are like, oh, I'm going to take my cash out. Oh, especially Tesla. It's been down besides the Q3 one. Everyone's been taking money out. Talk to other friends who are just regular normal people. They see that, oh, Elon's going political. They don't like that, so they're like, oh, forget this company. And then they win. So he's now on the winning team, and Trump is pro business. He's talking about lowering taxes and uh, tariffs for other international companies, and basically prioritizing domestic companies. So now all of a sudden people are like, and in the first after hours of that, the first day of the election day, they basically, it pops up, and then everyone's like, oh wait, should I go in now? Because everyone likes to be on the winning boat. So now they're like following the trend, and everyone was all about Nvidia before, but it's hit all-time highs. We're waiting for the earnings for that, and Tesla has been really low. Apple, Microsoft, Amazon, like all the $2-3 trillion market cap companies are near 52-week highs or all-time highs. And so Tesla's lagging this whole time. And you saw even today, there's like about a 1% decline in all those 3-4 major corporations. And it's part of it, I'm assuming, is going into Tesla. So you see this outflow of cash because it's at all-time highs, and Tesla still has a lot more to run. So they're going to go into it, and everyone's like, oh wait, it's going to go on. And so this is like the third, fourth day. It's like, oh, we got to go in now, and all the people who was like downing on Tesla are now like, oh, let's go on Tesla now. Oh, we're confident about Tesla, even though we're bashing Tesla and Elon 5 months ago. So
Sat,
when it comes to this kind of stuff, yeah.
Sat, can I frame that for a second? Because
Sure.
you've been like an early investor, and I think you've been at all the shareholder meetings. Is 2013 and 2020, 2021, both occasions, and we're experiencing something of the velocity of the stock price is very similar to 2013 and 2020, 2021, is I can't remember during those periods that Wall Street said the stock is fairly valued. It was always extraordinarily overpriced. And I remember investing and being in the market day to day throughout 2020 and 2021 and watching Tesla go up in a straight line, and all of Wall Street could not understand why it was going up. And then within a year or so, the earnings came in and the stock was at, a 30 or 40 times multiple with a growth rate of 50%. So I get the sense that we're in a similar situation, that what you experienced in 2013 and 2021 is, we don't see the earnings there. Seems like there's a lot of speculation, but the amount of money that's coming into the stock is not a bunch of investors thinking, oh, can I just get the next greatest run up in a stock price? Let me sell my Apple and buy some Tesla. There's something ahead, and the market looks 12 to 18 months ahead. And I think there's a lot of levers, which we've all talked about here before. A lot of levers in terms of energy, in terms of vehicles, in terms of FSD margins, in terms of road. I mean, the list goes on. I don't need to preach to the choir here. Xander, you've got your hand up.
Yeah. I was going to say, though, 2021, it was the Model 3 ramp, it was the Model Y ramp, and that delivered earnings growth over those quarters. This time, we'd have to wait until the second half of next year or even 2026 to start seeing earnings.
But all Wall Street was saying at the time, it's way too expensive. We had people in our firm wanting to short, like people actually like shorting the stock because Wall Street, everyone said it was way overvalued. And literally like 6 to 12 months later, the earnings caught up.
Yeah.
That's what
if you remember, Simon, though, the stock was heavily shorted back then, and it wasn't profitable. And that's when it just turned from, if you remember the Q1 2019, that disastrous deliveries, and everybody said, oh my God, they're burning. And then it started flipping, right? Later in 2019 into 2020, they showed the power of their company, the way they manage the supply chains, and that they were so heavily short. I can't remember exactly. Was it like 30% short, 20? I mean, it was something ridiculous, and that was a lot of the buying power, Simon, that took that stock through the roof.
Yeah, you're right. There was a massive there was a short squeeze. You're right.
Yeah. So you had Q3 2019 is the first time you had the showing of earnings, and so that was the first time, and then that started the wave. But what I was gonna say was that like we just went through this with my guys on looking at like you were saying, Simon, on the amplitude of the wave and looking to see what the upside to a weekly candle looks like. And Sat can, looks like we dropped him. Let me bring him back up. He knows those numbers pretty well. And so, but here's my point. Like yes, it's completely different, but how much better is a company? You didn't have the bot. You didn't have energy like we did, in the 2019, that whole wave through 2020 after COVID, right? It got slammed down, and then Powell did quantitative easing, and all of a sudden it was okay. Trillions are being printed. It's all going to flow into stocks and equities. So, and then we started tightening, and now we're back on to the upside. So, if you're doing DCFs, you're bullish. If you're looking at regulation, you're bullish. Now, the question I've been asking myself is this a trap? And I'm having a very hard time to argue for the bear case in this situation. So, I mean, we don't have to do that now. I want to hear what Wiggle has to say, but I just think that like it's definitely, we shouldn't think that that there's nothing stopping it, and everyone should FOMO in to 300 or 420 calls for next week. Like it's one of the possibilities. So I like to think about probabilities of what the outcome might be. But definitely, financial advice is think of the downside first before the upside. You're better off leaving money on the table than you are dealing with what it feels like to be losing and having red positions. Wiggle?
Yeah, think of what you can lose first before what you can gain. So I like Christian's analogy of Tesla stock being a coiled spring. It's pushed from the bottom by the sense of urgency, relentless innovation, constant supply chain optimizations, penny shaving. And from the top, it's pushed by regulatory pressures, lawfare against Elon, Wall Street disbelief, current administration's hate for Elon and his companies by not even saying his name when Starship reach orbit, and like it's just a global macro climate. And speaking of lawfare, McCormick did say that we'll know more about the fate of Elon's compensation package, which, by the way, is now worth nearly 100 billion after this price action from 56 billion when she ruled against it. So we'll at least know what happens next. Get some clarity on that, and by the end of the year. And another significant event, I think it's more like a symbolic event, but it's still significant, House confirmation by Republicans, which will symbolize the red shift in taxes, regulation, and potential economic boom. And today, a CNN correspondent stated that I think Musk, and I quote, I think Musk is becoming the first body. He hangs around foreign leader calls. Trump puts him in the phone with them. Donald Trump is in awe with Elon Musk. And end of quote. So, to which Elon responded in a post, and I quote, I'm happy to be the first body. So let that sink in. Like, basically, we have Elon in the White House, and Trump looks up to Elon, and I think there's a lot of synergy there. And the last point I'll make is, in the last 3 years, Tesla revenue tripled, yet the stock was flat or fell. So we were in this 3-year dip, and this is the correction.
Okay. Thank you, Wiggle. So in the last week since the election, shorts lost another $5 billion. And here's what the bears are saying. Winthrop Capital was being interviewed, and he said there's two things that he sees that's going to be negative for Tesla in the coming 6 months, right? The first is China. So this obviously there's concern that Trump is going to be much more of a harsh on China, what's going to happen to Tesla in China. And secondly, Elon's going to be distracted. He's going to be so focused on the politics rather than the businesses. The answer that I have for that, of course, is that, well, Tesla China is 95%, supply chain employees are all in China. They're not going to shoot themselves in the foot because they're just hurting themselves. This is not a U.S. company in China. And then with Elon being busy and distracted, I mean, it's shown me another time that he's ever been distracted. He's been managing 6 companies. He onboarded Twitter to become X, and the company's just succeeded. And then this is all on top of what's going to happen in January to April when you've got additional new vehicles put out. You got the interest rates falling. You've got the testing of robotaxi. Everything's still continuing to rise. And so but anyways, that's my rebuttal to their bear case, but that was what they said.
That's a terrible bear case. I'll just reiterate, Herbert. So you're right. Tesla China serves China. So they do send to Europe, but that's not America. So tariffs by Trump that's we got the 2 factories in America. We got one in Europe. So Elon played that perfectly. Elon being distracted, we know that's not any issues. He's got millions of companies. He's doing millions of things. He was campaigning. None of that matters. So they're terrible bearish arguments. But let me go back to my original point, and then you can get more feedback from everyone. Think about, and this is not political, right? This is just how it is. If Trump didn't win, think about it now. Does Tesla sit here right now if Harris wins? No, they do not. So it's as simple as saying, the reason the stock is rocketed is because Trump won the election, and like Xander and Sat was saying, he sits at the right hand of all the power in DC now, and Trump is a very loyal guy. Forget about Trump. It just is what it is, and he sits right there, and Trump will reward. Now, they won't do it in a way where it's illegal or anything, but Trump's a loyal guy, and Elon did everything he could to get that man elected. He was campaigning every day. I was watching them every day in Pennsylvania, day after day after day after day. So they're intertwined. And if anyone can't see that, and that is like 80% of this, I don't know what to tell you.
Yes, I taught this business associate, like business person that I deal with, and it was very much, Kamala, and I was like, I'm sorry, if you look at the business and investments, who are you gonna vote for? And it's like, she didn't like Trump at all. She doesn't like him at all, and I was like, well, can you complain that your investment has gone up like crazy now? It's like, no. It's like even though the person's like unhappy with the politician that's elected, they're happy with the business. And at the end of the day, I think people will like their business to do well, and they're not going to complain even if they don't like the politician.
Yeah, 100%. Like it's just clear as day. But like eventually, Tesla, the fundamentals will catch up with all this. And I'm super bullish, like you, Herbert, with humanoid bot. So I do believe that the market could be pricing some of that in, right? Like humanoid bot 2, 3, 4 years down the road, some of that could be in here, thinking, okay, yes, the momentum from the elections taking off, and Elon's regulatory de-risking and all that, and he sits right there. That's helping the rocket, right? But then people, as they're buying, say, oh, well, they got that, Tesla bot. I've seen that. That's going to be amazing down the road. So let me buy shares here before, I don't want to buy it at 400. So I'll buy it here at 320, and then it rockets to 360. Oh, I better buy some at 370 before it hits 400. And then it just feeds on itself, right? It's just, it's big momentum. Eventually it will break out. So I'm just holding shares. I'm not getting all caught up in the calls thing. People could do that. For me, it's easier because I just sit there in the shares. If it pulls back at a nice level, I can add. Otherwise, there's no reason for me to sell. It goes up every day. So it just keeps, a nice size position just keeps going up. So, everything's looking great. And I just play it, day to day. And like I said, if there's a dislocation to the shares, it's probably a pullback you can buy because of the next phase of next year. Like you said, the robo-taxi coming in Austin and California possibly, or maybe somewhere else in Florida. They have pretty good regulatory when it comes to robo-taxi. So, and then, the next Optimus video that drops, like some crazy thing of doing something magical, right? The people that will reinforce. So, I think the fundamentals will catch up.
So
Xander,
Simon,
is this
yeah.
FOMO? Because a lot of the people jumping on board now, you guys have said, is FOMO, easy in, easy out, right? So a lot of them could be not able to wait it out until the first two cars are revealed, and let's say it's delayed till the third month of next year. That's too long for them to wait.
Exactly. So, Simon, correct me if I'm wrong. If you're a fund manager and you see 1010 and you witness, and especially if you were there, which was a completely different experience than what you saw on TV, because my mind was absolutely blown. Seeing one robot behind a counter, then another robot, doing all kinds of things, no wires, no nothing, no loud clunking things. And then I turn the corner and there's two robots and they're working and waving at each other and doing the hula. And then you turn the corner and then there's five robots all dancing, synchronized. And like when you experience that, and then you see the Rebovin and the Cybercab, which I was in, like once you experience this stuff and you see that how flawlessly everything ran with FSD, and you have a Trump and Kamala, well, I guess Harris, I should say, election coming up. Are you gonna deploy, or are you gonna wait and see before you go? So it's gonna get priced in, right? If there's no regulatory hurdles and you bought the vision, to me, this has the potential of being the repricing of where Wall Street buys the vision and it's supported with a White House that appreciates this amazing engineer and this American company. So
I think
that's
you
how,
nailed it. You nailed it.
is is
And I'll,
that accurate?
yeah. So I was in New York during Robo Taxi or Robo Cyber. What was it called again? Help me out, Herbert. It's a long
Robot.
Cybercab robot.
Cybercab.
We Robot.
Cybercab.
We
Cybercab
Robot.
event.
Yeah, We Robot is what you're
We
looking for.
Robot. Thank you. So, and I actually jumped on your pod during the live announcement. I was in New York visiting with with BlackRock and Goldman. And the next day after the event, I was in the Goldman offices, and they were showing us their best ideas for AI and how much money they spend on identifying business trends. And I took a snapshot of their best AI and second and third derivative ideas of what's going to be successful in AI. Nowhere on the chart was Tesla. And they actually commented on the day, because of course I'm watching the stock plummet the day after the robotaxi event, and I'm thinking, nobody gets this. Holy crap. Like, people were talking about how the robots were, were operated from somebody behind the scenes, and I'm going, who cares? Look at the movement of those hands. They look real. So I don't think it was fully understood. But then I heard the people at Goldman, and this just happened to be the crowd that we were speaking to, they were commenting how they haven't invested in Tesla in all of their funds. And thank God for that. Look how smart we are. And so I take away from that is that they are significantly overweight based on their political views at the time. Goldman doesn't have political views. They believed that Democrats would win the election, and they talked to us about how they're positioning their portfolio based on that outcome. And here we have an outcome that is completely different from that. But you've got, the king of kings on Wall Street, Goldman Sachs, who is not invested in this, in what I believe is the greatest AI play. I can't understand how I'm a simple boy from Prince Edward Island understanding this, and the guys at Goldman in New York don't seem to see it. I really don't get it. So I constantly question it, and I constantly go back to the drawing board with my brother and say, what are we missing here? So I think that is the key, that they didn't get it. And the day after, the stock fell, and it continued to fall. And I think the fact that Elon was, here's the thing, Christian, you're still here. You mentioned how Elon was out for about a week campaigning for Trump. And it's interesting, the second he says, I endorse Trump, people should have figured out that when Elon decides to do something, he figures out on first principles how to do it, and then he just gets it done. And he went to Pennsylvania, and you got to think of this. This is a guy that is one of the greatest gamers in the world. If you've ever watched like where he is on the charts of World of Warcraft, he's one of the best gamers. This guy knows game strategy. He understands it. And here we are going to election, and they're up against a bunch of other like people who don't understand that game theory. And he goes to Pennsylvania. He doesn't go to California. He doesn't go to New York. He knows exactly what he needs to do to get it done, and he gets it done. Right. So I think there was a significant discount on the stock going into the election based on Elon's political views and what people thought would be the outcome of the election. That discount is being removed. And I think that discount, I don't know what that price is, but this is just a return to fair value. And then you've got FOMO kicking in. And FOMO is like, let me catch this stock because this is the stock in the market that's going up, and I need to have a piece of it because I'm a taxi driver in New York.
So correct me if I'm wrong. I talked to a guy who used to work in the finance sector for many, many years, and he told me that like those brokerages or Goldman Sachs and those financial institutions, if you have an analyst that put out a report that says, "Oh, short Tesla" or "It's sell Tesla," and there's a sell rating on it, it's you really can't go and buy it as an individual fund manager of another fund within the same financial institution, where you figure it out Tesla and you're like, okay, I think we could go into it. But if there's a sell rating from the same institution, it's really hard for you to go and buy it. And so
No, you have, so there's two levels of fund management. So if let's say you're a fund manager at Fidelity, and you have all of their analysts working for them, and they're managing the mutual funds, and then you've got your analysts that are working for you. and they report back. And at that firm at Fidelity, they will rely on those analysts for the data. But as the PM, you make the final call, and you may have a negative outlook on the stock, but depending on what your strategy is, or how you may be a guy who's deep value or growth or turnaround story. So in terms of funds, no, you don't have to follow what the analyst is saying, but people do rely on that. Usually it's the retail investor that will listen to that analyst report and say, okay, well, I'll read that. As a manager for individual accounts like we are, I will have access to, and we previously worked at one of the largest bank-owned firms in Canada, and our analysts would give us these reports, and we had 50 or 60 analysts reporting on different sectors, and we would listen to it, but we also had access to all the other analysts that we paid for. And we never had to do what they were doing. And honestly, I'd go into the rooms, and I would, we'd have like an institutional investor day where we'd have 20 or 30 companies present one of the hotels downtown Montreal, and there would be the CEO or the CFO, and you'd sit around, look in the room, and look around the room, and there would be 30 or 40 other analysts. None of them were portfolio managers, but they're the analysts that work there, and they're all like 20 years old. I'm not saying there's anything wrong with being 20 years old, but I'm going, what is it that you know about long-term economics of a business and disruption? So most of these people writing reports, not all, there's a few analysts on Wall Street that I have tremendous respect for. But when I would sit in the room, a lot of these people just got out of university, got their CFAs, and they're just putting things into a spreadsheet. So what I got from that was a lot of the reports that I would read, unless I knew exactly how long they were doing it, and what their track record was of calling it accurately. A lot of times they were just putting things into a spreadsheet. And if you have to track 50 companies, it's very difficult to get it accurate. And these people, or their analysts on their CFAs, just looking at the numbers, they don't actually understand the business dynamics. And I don't know how I can articulate it properly, but those aspects of analyzing investment are more important than just understanding the cash flows of a business or the PE multiple. Similar to like how most people missed Amazon in the last 20 years. I don't know if I sidetracked there, but sorry.
That was fantastic. Appreciate that, Simon. Awesome. Let's bring up Lord Pretty Flacco Justin, traveling in Japan. Day trader, momentum trader, long-term trader, stock expert. Come on up.
Hey, how's it going? Yeah, I mean, to hop onto Simon's point really quick. By the way, I am like by Lake Ashi right now. I'm just looking at the lake. Big, beautiful mountains here in Hakone. It's beautiful. It's very chill. But anyways, really quick, just to harp on, I have like maybe 5 minutes I can talk. What Simon was saying, I mean, the biggest thing from like a modeling perspective, right, is that if you're trying to think about a business like Tesla that has a huge step change function that's going to release, let's say, for example, when autonomy comes, that is a binary event. Either you have solved autonomy or you have not, right? Just like Optimus, you have either solved Optimus and are scaling it or have not. The problem is if you're trying to apply some sort of linear logic, right? Linear growth. Okay, maybe they solve autonomy in 2027. They release, 100,000 units, then 500,000 units, then 700, right? That stuff all goes out the window when there's a step change function in the business model. And so a lot of things that analysts will miss is that they can't put their neck out and say, oh my God, autonomy is worth X trillion dollars. If we discount it today at a reasonable discount rate, it results in, let's say, $200-300 a share on top of the rest of the business. Well, the problem is like they can't go and do that. So that's why you have guys like the RBC analysts flip-flopping and then bringing in Uber and talking about how robotaxis won't be a thing until 2040 because none of them can risk it. These are guys who are like, they're basically workers, right? They can't risk their career making a really, big kind of assumption about the business that's coming. even if it might be obvious. So this is why I go back to like either you think Elon Musk is the most brilliant and most capable person on the planet, or you think he's a complete fraud and a snake oil salesman, right? So if you believe the former, then you should be applying a lower discount rate to what he is saying and the timelines he's giving. Now, historically, since the autonomy day, everyone loved to harp on about how he kept saying, robo-taxis are coming, end of the year, feature complete, blah, blah. We know that, but at the same time, at some point, that logic is not going to hold anymore, right? At some point, it will get solved. And I think a lot of us saw FSD this year, and we also saw, more importantly, Elon's acceleration of various key initiatives related to robotaxi business. And a lot of us, or I should say some of us, caught wind of it back in April or even March, like I did. And I knew that it was coming. And then I thought, well, if the robotaxi goes into production, that's probably going to be reverse engineered from the time it takes, at least internally, to figure out FSD and get it to feature complete. And lo and behold, right, Elon said it's going to go into scale production in 2026. And they're going to launch in 2025, California and Texas. So that aligns perfectly. Like all of it is reverse engineered. This guy deals with planning on a massive level that requires multiple years of outlook and precision. We saw it back when he made his projections about Model Y, Model 3, 3, 4, 5 years before it actually scaled up to the level it did. He was precise to the, within an order of magnitude, easily. And so this was a big thing to miss. Like, this was the debate all year. It's like, it's going to happen. It's just a matter of at what point is a catalyst going to come in and trigger it. And it just so happened to be that the catalyst was the elections.
Justin, I've interviewed you a few times, and you referred to the term the great repricing. So months ago, you were saying at some point, Tesla's going to undergo a great repricing. Do you believe that what we're seeing now is the great repricing? And what is your definition?
Yes. To answer your question, yes, we are already in the middle of it. Not middle as in like, we're already 50% there and we've got another 50% to go, but we're in the midst of it, right? The early tell was when we broke technically above the multi-year downtrend line. That was the first tell. The second tell was a monthly MACD bullish crossover that occurred a couple months ago. And now we're starting to see the technicals really kick in. And as you guys know, because you guys all invested in Tesla, Tesla has very short, concentrated windows of growth before it kind of consolidates for a X period of time. And so what we're seeing now is we're seeing the great repricing 100%. I mean, this is a volatile move upward. That means that price is not anywhere near where it should be, right? That's why we're seeing these 10%, 10%, 10% moves. It's just not anywhere it needs to be. Now, some of it obviously is market dynamics, whether it's short selling, whether it's gamma squeeze, whether it's, animal spirits, whatever it is, it's going to be exaggerated. And we're seeing part of it. And I think the definition of the great repricing, in my opinion, or at least the way that I used it, was in terms of the extremely high discount rates that are applied to autonomy that are going to be drastically reduced as catalysts kick in. So for example, maybe the catalyst for autonomy will be version 13, because we'll see, oh my God, miles per intervention, just, 10x, right? Or in this case, I should say 6x is what they're projecting. But each version update is going to be a doubling. And at some point, it's going to be ready to go. And I think since Elon already gave the green light on California and Texas, it's happening next year. So if you're a stock investor, I mean, I don't know what the hell you should be worried about right now. You should just be waiting and enjoying life, because if you're trading it, it's different. It's a little bit more difficult because these multi-day rallies are really violent upwards and it's hard to hold on. But that's what I've been harping about the whole year. I was like, look, I get we're stuck at 220, we're going down to 200, and we kind of like get in this like little cycle of like, pops, and then it dips down, and then pops again, dips down. And my whole thing was like, fucking ignore it, man. Because when this thing pops upward, when it breaks out, it's going to be the hardest part is going to be holding on. And that has been 100% true.
Wonderful.
Do y'all
Thank you,
remember the Bill
Justin.
Gates
Absolutely,
short?
Justin. I got a question for you. So,
Hmm.
honestly, were you surprised that we broke 300 on Friday?
I don't even know. I was like out drinking. I didn't really care.
You didn't even see.
You know,
You didn't,
I yeah, like I was literally out.
I wasn't,
And,
Xander.
yeah. I mean,
Hey.
was I surprised by the velocity? Of course, 100%. I always am, and that's why I said for the whole year, right? I was like, look, this shit's gonna be really hard when it really breaks out, if I'm right. And we're seeing that right now. It is hard, dude. It's if you're trading options, for example, it's hard to be like, oh, I'm gonna keep, 100% allocation, a gas pedal all the way down, and I'm just gonna expect it's gonna keep going, keep going, keep going. That would be really irresponsible. So what you have to do logically is you have to start taking profits. But the problem is if it keeps running, now you feel like crap because you're like, oh shoot, I sold too fast, or I'm taking profits too quickly, blah blah blah. Look, it's all a cycle, right? No one was making a big fuss and trying to buy the dip when it was at 200, 190, 210. But then now, 340, everyone's asking me, hey, should I get some options? No, dude, relax, right? It's like, it already happened. You're already late. Now the worst thing you can do, the second worst thing you can do besides missing the rally is to get in at the top and then lose money when it pulls back.
Thank you so much, Justin, for joining us. I know you're on your vacation. Appreciate you explaining the great repricing.
Yes.
So this speaker board just added some great speakers. You got Jeff Lutz, you got Amy, you got Josh. Jeff, tell us what you're thinking about this. And while he's talking, Xander, can you tell me what the most recent after hours price is?
yeah. We've retraced all the way back down to 358. So we gave back. I was trying to find if there was any kind of poster or anything, or this is just par for the course of wild stock trading. But 358.09 is the current price.
All right, go ahead, Jeff, and then we'll go to Amy and Josh. All right. You lost your spot. Go ahead, Amy. Thank you for joining us, Amy.
Mr. Herbert.
I know. Miss you.
Welcome back.
Yeah, okay. I can do spaces. I'm still not going to be really doing posts until they come down with some types of decisions in Delaware,
Okay.
or appeals are exhausted. When I look at this, we certainly know that there's a lot of just trading momentum going on, gamma squeezes, short sellers getting burned. But when you look at the fundamentals, that Tesla's valuation still doesn't include a lot of businesses that are going to be huge, and that includes the robotaxi, like Justin was just talking about. Also includes with AI all these data centers that they're building, that they're looking at trying to power with little nuclear thing, little nuclear power plants, etc. If you look at what Tesla's already done and XAI is doing, they're feeding the power into the megapacks and then running the data centers off of that because of the way that the compute turns on. They need that filtering and that stable compute. So that's not even in anyone's valuations. And the energy business, as we know, is going to do great margins. And then the take rate on FSD, people were doing some calculations. It looks like it's above 25% now. So that's also not in Wall Street's margins on that software component adding to the profit of the car. So I'm encouraged to see Wall Street starting to value in some of what we always knew was in the stock, but we're still in just very early innings. Kind of interested in what Simon has to say.
Well, we've been hearing great things from Simon earlier. So wonderful that you are and sat one of the early investors, and then of course now you're leading the legal counter back. So I appreciate you're doing that. Jeff, did you want to come in?
Yeah, I missed the first portion of the call, but what we talked about earlier today, Herbert, is that there's a lot of support for what's happening because of the third quarter that Tesla had. They took the metrics that were not on purpose, but just how they're functioning, that are most important to Wall Street around gross margins and earnings, and they blew them out. And the third one, they blew out cash. They almost doubled the the cash position. But this is, you know, so I think that is a foundation for this, but it's just setting the floor. And really, honestly, this is like a huge weight was lifted off of the company, lawfare, a lot of different things. And not only was a huge weight lifted of like bad things that could happen, not saying that bad things can't happen, bad things can happen. You should, as an investor, you should always be aware that something weird or bad could happen. But everything operates in probabilities. And the probabilities of bad things happening, you know, known bad things happening probably declined, right, with what happened with the election. And not only did the probability of bad things decline, but the probability of actually reducing some of the regulatory resistance declined, and that improved in a favorable way. So you have bad things coming off, and you have resistance coming down for future regulatory hurdles. None of this has actually been encountered or in front of us yet. Tesla still has to produce software and driving performance that's going to allow it to be in these conversations and the past. But instead of there being like this cloud of like, well, Tesla could have the greatest thing ever, but you know, Richard Blumenthal and Ed Markey, senators from the East Coast, are going to write a letter and try to shut down, you know, this or that. I mean, they may still try some of this stuff, but it just, Tesla's in a different place right now, and so is Elon. So I think some of that is getting priced in now, and it's starting to just basically uncork. And I do believe in some of the technicals and where the stock has been and you know and points of accumulation. I do think some of that comes into play. But man, I don't know if you guys talked about like how quickly it moved through 300, and there hasn't been a lot of, you know, bouncing around. It's kind of gone up in a straight line. So I don't know if that was a topic earlier or not, but that's I find pretty interesting right now. It's kind of just blowing through some of these levels of resistance pretty quickly.
Yeah, I'll expand on that a little bit. So we've been studying this and trying to find some patterns. You had a $90 move in 1 week. So we hit a low of 238, and then we hit a high of 328 last week. If you go back and you look at the size of that move, you won't find another one like it. So as a percentage, you will, but as a dollar amount, it is very rapid. And then if you look at like a 2-week interval, which is something Sat brought up, so I want to give him credit for that. It's insane. So we're witnessing something that this is why I bring up I watched a really good video with Larry and Farzad, and we're like I'm trying to find the mathematical explanation for where's the money coming from for the trade. Is it going to end? Is this just a FOMO wave, or is it a repricing? Those are the two questions I'm trying to answer, because I keep thinking it's a trap, but at the same time I was wrong. We did not pause at 300, and to now in 1 day, you know, shoot up to 367. It's a wild move in 24 hours. So look at the lows, look at the highs. $10 was a typical trading range. I've been watching the stock very, very closely for 5 years straight. $10 is a good trading range in this 15x post split world. And you started seeing $15 moves. Now we're seeing $20 moves. And the question is when does it stop? And if that amplitude of this wave, if you were to go back to the 2020 wave, here's what I did that I highly recommend. Open up like the weekly chart or the monthly chart and zoom all the way out and look at it like a wave, and look at what the wave looked like going into 2020, and now look at the start of this wave. And the question becomes is how high can it go with, like, this to me isn't the wave, this is a tsunami. But this too bullish, and I've been very cautious, and I'm taking cautious positions, so be careful. But that's what helped me, if you're going to look at technicals, to go and look at it in the forms of the size of a wave, like a surfer.
Xander,
Yeah, if I
if I
could
can
just,
comment, go ahead.
I'm just going to go real fast. And then I'm probably going to hop off. Xander, if you remember, we talked about how many times did Tesla approach 300 after it came down to 200, and then it bounced 300. I think it was like the fourth time it got in the 290 area. So when it was sitting at 298, I didn't do anything crazy, but I'm thinking, I think this easily could go over 300. You weren't thinking like that? Like it was closed at what, like 298? It never closed that high, like right on 300. So when it pushed over 300, then all that resistance was gone. Because I think it was the
Yes.
fourth time it bumped up on 300. So once it got over 300, now we got green field. So it could be, the next stop could be 400, right? Am I thinking about that wrong?
Yes, I'll respond briefly, and I want to hear what Simon has to say. The big thing to me is call walls. We've been conditioned to sell the rip. Okay, I've been doing it for 6 months straight, since April. We've been conditioned for it, but I've been waiting to shut it down and shut down covered calls. So when we had a cover call of 300, and I posted about this on Friday morning, and then we broke 310 and 320 and 325 and almost got to 330 in one day. That is not normal. So what I mean by surprised is that is a change. Go back and analyze everything that you've said and everything that you've thought, and realize that this is not normal. And then you can kind of try to guess, is 400 the next level? Is it 414, the all-time high? Simon, go ahead.
No, I was going to say, like, when you're looking at the valuation, so there's a company up here in Canada that did extremely well. It was a competitor for Amazon. I wouldn't say web services, but basically it was a competitor for other companies that want to sell their goods, Shopify. And it became Canada's the largest company on the TSX for a while. And we never owned it, but it just kept going up for a couple of years. And I would talk to our analysts. And so what I'm referring to is all the analysts on Wall Street, everybody had a buy rating on it. The valuation was astronomical. I mean, you couldn't, there was no way that you could price to sales, price to cash flow, price to EBITDA. It was ludicrous, but everybody on the street kept raising their price as the stock went up. And all I'm using is, the reason I'm saying that is, understand that you're going to have Wall Street analysts, and if the earnings don't walk into those price targets, then yes, you will have the stock fall eventually when you get into a bear market and everybody sells off. Similar to, I'll give you another example. We owned PayPal for a number of years, and it was doing extraordinarily well, and we kept trimming. I could not understand the value. It became more valuable than JP Morgan, and I couldn't understand why. And I said, okay, stop trimming. We obviously don't understand this. And we all know what happened after that. It obviously fell. We've made more than enough money from our trims. But the point being is that stocks can remain irrational for far longer than we can ever understand them. And
Or
I'm
be
not
liquid.
saying, yes, that's actually the quote, then we can remain liquid.
Yeah.
But I don't think that's going to be the case with Tesla. But I do think that the stock can run irrationally, and then the earnings can walk into it to justify. Maybe we're going to run into the same thing that we had after 2022. I don't think that, because we have robotaxi around the corner, and we have Optimus, and these are two massive order of magnitude earning drivers. But back to like the Wall Street consensus, you'd be surprised at how high this thing can run. And I listened to a pod, I think, Xander, it was you and Herbert that was talking. and you were saying that this thing's going to rip and you sell at the high. And I thought to myself, I was driving my car and I thought to myself, wow, when you got the Tesla bulls wanting to sell, it's probably time to buy because we've been so burned for the last 3-4 years.
Yeah.
That it's probably going to hang in there. And now all of a sudden we have all of the institutions plus the people that haven't been invested in Tesla that are loading into this. Like I said before, this company was so pressured, so undervalued because of the Trump discount, because of the warfare against Elon. And now that has risen and is only returning back to fair value. And then above and beyond that, you're going to have FOMO. And everybody's trying to catch this. And you're going to see the stock moves every day $10 or 10% a day. And you're saying everybody in this forum is probably saying to themselves, when I get a pullback, I'm going to try and buy some more. And we're not getting that. And everybody's trying to do the same thing. And I think that's one of the reasons the stock just keeps running higher.
Bingo.
I've got a question I want to ask each of the panel members to all answer, right? So one is, if the price is going to continue going up, when will we hit 400? If the price does fall, when would we hit 300? Before we get started, though, I want to welcome Josh West. Josh has a YouTube channel. It's amazing. And he was personally invited by Franz to do a personal view of the RoboVan. And then he was just met with Kimball. Man, you're everywhere. You're killing it, Josh.
Hey, thanks, Herbert. Yeah, it's been fun. It's been a big couple of weeks, big month or two, I guess, for the Musk family. Yeah, it's been pretty incredible. Yeah, I mean, it's funny, like for most people in this room, like just reference to the stock, this is kind of like some people are getting some deja vu. But each time, as much as it is the same, it's different, like there's some 2019 vibes in there and there's some 2022, and yeah, it's kind of interesting.
What's your
But every
answer to
time's
the
different
questions?
because the company's changed. Sorry, what did you say, Herbert?
What's your answer to the question? 400 and 300.
Oh yeah, so answer the question really quickly. I mean, if it rips, you could see 400 in a week. I don't know that the downside is going to be as quick because, like the fellow that was speaking earlier, Simon, fellow Canadian, I think you're going to have enough people waiting for that drop to step in and buy because they think it's going to rip again. So it'll slow the fall. That's my feeling on it.
Okay, Jeff.
I don't know. Tomorrow, Wednesday.
You're okay. That's your attitude. Fine. Xander.
Oh God, internal circle. I've been calling for 420 by the end of the week, but I gave myself a break and I said 420 by next week. But I'm not buying calls. Well, okay, I lied. I'm buying calls for next week or end of November for that, but it's literally just money like lottery tickets. I don't care if I lose it. It's just there's so much FOMO. But
Nobody
300.
should. Sorry.
Yes, nobody, don't listen to me. This is me. I'm willing to lose money. I'm a degenerate gambler.
Just answer the
Degenerate
question.
options scam. Listen. You and
You're the
pansy over here in stock. So 300. I think what Josh said is actually very accurate. Every pullback is going to be met with FOMO wave, but it depends. So I'm watching the VIX. I'm watching macroeconomics. We have data coming out. We still need to be, diligent on that front. So that determines it. During the day, I feel comfortable holding kind of, long-term calls. But overnight, I don't feel comfortable still. It's going to take time to, to lose that fear. So I like shares overnight, and intraday I can see what's happening. But this is not financial advice. I'm an idiot. Monkey throwing darts.
Christian, are you still here?
I'm here. No, yeah, I'm here. It easily could get to 400 by the end of the year if this bull market continues and everything's kind of grinding higher. Absolutely. I think 300. I don't think we go back down that low unless we have a correction in the overall market. I think the last time we talked, I said Tesla will do well if we're in a bull market, and it wasn't doing very well. I think we were down 40% year to date, in the beginning of the year, like to the middle of the year, and now we've had this just like rip face rally. So I think it easily get to 400 by the end of the year and clear that easy as long as we're in a bull market. We got Nvidia earnings come up. So if that is good, I think that could overall lift the spirit of the market, and Tesla could just kind of ride that wave. So that, and then I'll just remind everyone, as good as this feels, Tesla stock in 2021 was $414. That was the all-time high. So I know everybody, not really me, because I kind of trade in and out. So, I don't feel like that desperate. So, but yes, it feels good. And could it go a lot more? Of course. Stock is very random, and watch the price action. What I've learned over the years is I don't try to predict anymore. All this discounted cash flows, throw all that out the window. Watch the price action. Watch what it's doing. Watch what the other stocks are doing, and then play a probabilities game off the price action. That's all.
Okay.
Well said.
Amy?
Yeah, as you know, I don't really do predicting stock prices. I'm more of a buy and hold person. But if I look at what is closest since the IPO to this scenario, I would say that my closest thing was, a couple years ago in January, where we were dropping, and we had the perfect storm of like three things going on at the same time, with funds needing to rebalance at the end of the year, Elon Musk selling, and it just kept, and people were asking the opposite way, where's the floor? And if I look at it right now, I see kind of it's a perfect storm on the upside. The law fair overhang was really, really real for Tesla. The regulatory overhang, and how many times have you heard Wall Street people say, even if they solve autonomous driving, no one's going to let them implement it. That is a completely different scenario now. I mean, that has just been upended on what's going to happen when they solve autonomous driving, and how quickly can they get the new models approved, and how quickly can they get them on the road. You're going to have, their Wall Street analysts are going to have to re-rate their timelines on all of these things. And then there's that reevaluation of moving forward the targets. That's number 3. So you have lawfare, regulatory overhang, moving forward timelines. And then the last thing is, now that Elon Musk it factor is there in a completely different way. People who are not familiar with watching him the way that we are have now seen what he can do when he sets his mind to something. He decided he wanted to get Donald Trump elected. He was probably pivotal in getting Donald Trump elected. So you have a whole bunch of people out there readjusting their investment criteria when they look at what can Tesla do and how big can it be, and realizing that maybe they really don't understand this. So I'm agreeing with, on the pullbacks, you're going to see more people piling in. And then on the other hand, just for the products, there's going to be a lot more people that consider buying a Tesla, that consider buying a Powerwall, that consider buying solar, because they just are seeing and hearing so much of Elon Musk these days. But at some point it's gotta, it's gonna correct.
Wow. Well, good answer. Wow. Wiggle?
Yeah, that's a very cool point, actually. Like, this price action will likely result in someone buying more Teslas, which will then drive stock up, or deliveries for Q4 up, which will also be great. But yeah, I don't think we would see sub 300, because it appears to be that Roof has left the building. But the 400 could be possible by end of the month.
Okay. Simon?
Sure. So I'd say that what I say to clients when you're looking at, and we've had actually clients calling recently and said, "Oh, should we not be trimming right now on this rally? The stocks moved significantly in the last week or so." And what I say is, look, think of, and we've done this with other companies, whether it be Apple or Nvidia or Amazon, Microsoft, and if this company is going to 500 on our 12 to 18 months target, if it's going to 2,000 over 5 years, and you have conviction that it has a possibility of going to 20,000 over 10, 20 years, and then how do you invest in court accordingly? You can play the day-to-day swings of $10 or $50 up and down, but your job is really just to accumulate as much as possible when you know this company with conviction is going to 1,000 or 2,000 or 20,000. So that's kind of my take. Is I don't short term, anything could happen. It could be a war tomorrow, and all of a sudden the market sells off, or some kind of terrorist attack. I don't know. But longer term, if you look, when I talk to clients and they're worried about the election results, and you say, does it matter? The only thing that matters is owning Apple over the last 15 years. Didn't matter who was in the White House, or owning Microsoft, or owning Nvidia over the last 5 years. It really didn't matter the day-to-day swings. And I think sometimes we zoom in and we think, how can we trade this? It's if you have a case and it's a good investment and you've qualified that investment long term and you're confident in the long-term economic impact of that business, then try and accumulate as much as possible. And whether it goes up $10 or $20 in a day, don't feel bad because you couldn't buy more. If the stock is $350 today and you couldn't buy some, but you could buy some at 400, I don't think you're going to feel bad when the stock's at 2,000. That's my
Yeah,
take.
Simon, that's a great point. Like, we've been talking about this with the guys. It's dollar. We're used to thinking about dollar cost averaging down and buying the dip, but Flacco said something that stuck with me, which is manage the upside. Being able to dollar cost average into your position, right? Whatever that is, and however you want to play it, whether it's long-term leaps or straight shares, right? The straight shares let you sleep at night. If you're wrong, you could just not worry about it. Eventually, inflation and this company's performance. Obviously, there's management risk, there's key man risk, there's all kinds of risks. But over time, if your time horizon is long enough, we'll be okay. But something that I recommend that people kind of track if you're looking at technical analysis is go look at the gaps in the stock when the stock leaves a gap behind, whether it's after an earnings event. So we're leaving over the last few days giant gaps, and the question becomes, do we go retrace back down there? Because it doesn't appear that we'll even be able to unless we have some sort of correction or a black swan. And that has been helpful to me to kind of lose some of this feeling of I need to keep selling the rip. And I have completely stopped selling covered calls. I'm thinking about just set it and forget it, right? Let your winners run, but doing so in a managed large safety net perspective still. If you're messing with options, be careful because it can pull back very, very sharply and you're paying high IV and yeah, it can be very expensive and then you'll be very sad. So stay away from options if you can.
Actually,
Yeah, great.
Xander, Justin, sorry, just to cut you off for a second, there was Justin or Flacco made an interesting point recently on X. He's not here right now, but he commented that the option premiums have gotten ridiculously expensive now. I think he understands options better than most. I think it's a gambling market, and I love to gamble, so once in a while I'll play some options, especially when the election's coming. But that being said, you're right. The option premiums right now are exuberantly expensive, and if you're looking to add to the position, my recommendation, just own the stock straight out and be able to deal with the volatility.
Yeah, I think, and this is a great conversation, and I appreciate Simon's points, but I will say this, and I don't think this can be understated. In order for markets to thrive, you do need an environment. Like we were getting to the point, like I think I saw stats: 55% of the S&Ps under some type of investigation. The previous administration, again, not to get political, but this is just the facts. They have investigations on all the big tech companies. You saw how they were treating Elon. Wasn't invited to the EV summit. So I appreciate Simon's point in saying just own it, and depending on the administrations. But we had an active presidential candidate in Vice President Harris that was actively saying that X needed to be looked into, that X needed to, that would be very, we could put our heads in the sand and say, oh, everything's going to be all right. But that would have been very bad for Elon Musk to have the government snooping around against free speech and trying to shut X down and Elon worrying about it and all that. So as much as we want to say everything will just work out, don't always work out, right? We do need a good environment for business to thrive, where business regulatory can thrive, and now we have it. So I just want to really bring that home for the audience, that it just isn't as easy as maybe in the past it was, but I was to the point where, and this is just me specifically, if that administration got in, I don't know if I would hold any stocks right now, because I think the market would have had a deep correction because corporate taxes would have went up. Lita Khan at wherever she's at, the FT, she would have been really emboldened. She's already got cases on Apple. She's got cases on Alphabet. She's got cases they talked about Nvidia. They don't like Tesla. So, I think we just need to be, understood that we dodged a bullet here, and the free market could reign on here.
Hi, I'm not sure if it
Wait.
was already discussed, but for the longest time, I think for months on end, institutional ownership of Tesla has been hovering in the 350 billion dollars. But after the election, all of a sudden, the institutional investors just kept on buying, and right now it's 471 billion. So it's like a jump of almost 30%. So I think this is driving this like nonstop accumulation of of this price.
Okay.
Just to
Appreciate the points, Extra Rice, but we're going to go through the list here. We got Sat next, and then we have Max and JP. Go ahead, Sat. And Amy.
So one thing Christian kind of touched upon on the other side is that this is the first time where you have someone significant in government that is endorsing and supporting Elon. And Elon went out of his way to endorse the president-elect. And so you see for the first time Elon and Tesla related stuff and SpaceX where they're collaborating together for the first time. And people don't want to see conflict if they don't have to. And it's something that's going to be cohesive. They're trying to work something to be more efficient as a government, more efficient for the companies to get through the regulations and so forth. And so he's always talked about being collaborative with regulation. He has to deal with a lot of in the cars and the SpaceX and rockets. But the fact that these agencies are going out of their way to make it more difficult for no reason, and now you have someone prominent, the president-elect, saying that they're going to work, him and his administration is going to work with Elon. That's a huge part, and I think that boasts a lot more confidence in both his company, all his companies, and just in general as a government, as America functioning and going forward. And I think that enthusiasm of having of the future is huge in terms of how people think about the psychology of where America is going to go and businesses and stock market.
Okay, thanks. JP? Amy? Oh,
I was just looking up something real quick. Does anybody remember the $1 billion short from Bill Gates?
Yep.
Do you think that there's a lot of people out there doing that?
I just reported that just over the weekend, there's $5 billion lost by shorts.
I don't even know how this is measured. I think whatever number that's out there, it's probably higher because there's so many different forms. There's so many different ETFs. There's so many different ways for people to hedge on the stock. So I don't even know how that's even measured. Maybe I'm just the only one. I don't think it can be accurately
500
measured.
hedge funds that they were following, S3. But yeah,
I know.
there's more.
I mean, it can be measured by options, but I mean, if you're following the broader markets, it's just, you can't really measure it.
Yeah, it's a lot. It's, it is a big number. So anyway, we'll I'm sure there's people adding to it, tomorrow. So we'll see. That's what makes a market, and that'll continue probably for the foreseeable future.
Okay, Amy, you had your hand up.
Yeah, just something that Simon said. When you're looking at the ultimately where you think that the stock is going to go, I mean, I've always just dollar cost averaged in. When I got my paycheck, I just buy as many shares as I can, and I've been doing that since the IPO. So I've been underwater over 5 times. I've had lost 30% more of my value 13, 14 times on paper. It never mattered that much to me because I'm not intending to spend that money right now. And where I think that the stock is going to be is much higher than this price point right now. And if you really are intending to hold for a number of years, over time, despite my having bought shares at $414 a share, my cost basis on my position is less than $25 a share. And that's buying at all-time highs. So don't stress yourselves out too much if you really intend to hold a portion of this portfolio for a very long time, trying to time the stock. And I do believe that Tesla has fundamentally changed as a business with this election. The ability of Elon Musk and the team to execute going forward has been dramatically improved. I am trying to evaluate what I think they can do and how fast I think they can do it. And I'm just like, it's just astonishing to me of how different we are than we were 2 or 3 weeks ago on what the company can do.
Amy, great point, because I remember you said before that many times you and I have bought at all-time highs, but of course they're not highs anymore. Go ahead, Jeff.
Yeah, Tesla's definitely been encumbered by what has been before.
Stop it, Jeff. Stop it.
Perfect.
What?
What? Nothing.
Tesla's been unburdened, Jeff.
But it's been the passage of time. It was the passage of time.
By what has been.
Okay, we're gonna thank you guys. We're gonna close it down now.
Or what can be.
I thought Xander was going to weave that in when we asked him a one-word question. When's the stock going to be at 400? I thought he was going to say, "Yeah, I grew up in a middle-class background." And blah, blah, blah.
Stop. Okay, stock talk. I missed you. I'm so sorry. We're going to shut it down. Appreciate everybody joining us. What a power panel. Appreciate everybody.
It's kind of awkward, Herbert. We're still talking.
Great conversation. Yeah, right? As soon as you bring that up.
Good to be with you guys.
Shutting it down.
Herbert, you're socially awkward.
Yeah, Herbert,
we're still talking.
I love you guys.
7:30.
Wait, stock talk just got here. The conversation just got fun.
Bye.
Good night, everyone.